Ben, there's been a lot of talk about a housing bubble, particularly, from the Fed, from all sorts of different places. Can you give us your view as to whether or not there is a housing bubble out there?
Well, unquestionably, housing prices are up quite a bit. I think it's important to note that fundamentals are also very strong.
We just see prices come down substantially across the country.
Well, I guess I don't buy your premise. It's a pretty unlikely possibility. We've never had a decline in house prices on a nationwide basis.
Ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient.
Overall, the banks and the banking system are strong and resilient.
All right, everyone, let's get this going. Let's get the news flowing, and let's get those portfolios growing. We've got a stellar show for you tonight covering the global events, bonds, an analysis of the markets, and some trades for the upcoming week. Diving right in, let's talk about the absolute shenanigans that are happening right now with our supreme unelected officials who apparently need an overlord to control their every move. It's bad enough that Joe Biden is told what to do. They won't let me answer any questions, folks. Who won't? Now we have Jerome Powell being hand-fed questions. Like, look at the guy. He reads for an entire hour off a script. Is he an oracle? How did he know what every single question would be? And don't even get me started on the banking sector. We've harped on this enough, and shut up, because the banking system is strong and resilient. Aren't you guys listening to Papa Jerome? Ooh, tough to see. Turns out they aren't that strong. We're going to cover this in more detail later on in the show, but first, let's take a look at some global events. If you've been watching the news recently, it seems like they want war. Everyone is peddling for World War III.
The war is happening.
First, you're going to hear about it in the news. Then, you're going to be in a trench catching bullets, acting like you're Rambo, when in reality you're just Stuart Little. But don't worry, these warmongers are going to be far, far away, sipping champagne, making billions off the deaths of the plebs. NBC just hosted a war game simulating the invasion of Taiwan, and to that we say, what are you talking about? That's not even a place. Just ask the WHO. I'm not joking when I say this. My plumber, dentist, and Uber driver could have planned a more tactically intelligent invasion of Taiwan. Don't listen to these hooligans. They don't know what they're talking about. On the other side of the World War III front, we have Wagner finally taking the city of Bakhmut. Or they retreated, or they didn't. Who knows? You have Zelensky saying they still have control, and Wagner has photos in the city center, so who knows? Russia sanctioned the Lord and Savior of the USA, Barack Obama. And in response to this, NATO is, for the first time since the Cold War, drawing up a war plan for a NATO-Russia conflict. What war plan needs to be drawn? We already know how this one ends. Russia pushes the big red button. Moving on to the markets. What do we got?
Now, it's important to note that with the exception of Intel, we don't actually produce any semiconductors here in the US. We simply design them and outsource the labor to labs that have the ability to actually produce these. During the COVID helicopter money era, there was a huge boom in semiconductor demand and production. And this, when coupled with the supply chain issues, made the government pretty nervous regarding the ability to acquire chips, especially if Winnie the Pooh, President Xi, decided to stop exporting them to us, or if he decided to get into the honey that is Taiwan. So what happened? We started talking about a CHIPS Act, a rootin' tootin' America First bill, except that it subsidized chip production in factories at the expense of the taxpayer, thus circumventing the free market. Thankfully, this appears to be dead in the water now since demand for chips has dropped off a cliff, at least in partially due to the shitcoin industry being in a recession. You can see this in the recent earnings from Nvidia, a big name in this industry. If you look at their EBITDA, it's down about 50% from the peak. Now I know what you're thinking. M4, the stock price is up 250% from the bottom. Yeah, and with a PE of nearly 200 and almost $1 trillion market cap. And their earnings are like $7 billion a quarter. That's what we call a bubble. Now, given this and all the insane gamma squeezes we're seeing, partially due at least to these zero DTE options, we're having a hard time believing this AI mania. AI has been around a long time, and while it's getting better for sure, it's one of those, if it looks like a bubble, talks like a bubble, and trades like a bubble, it's probably a bubble. We're seeing a lot of these companies jump on the AI train, and their stocks are moving 20, 30, or even more, maybe 40%. Palantir is a great example of this, being up 70% in less than a month. Shit company? Not a problem. Just announce that you're developing an AI. This reminds us a lot of the shitcoin boom in the 2020s. Don't believe everything you hear and do your own research on AI because contrary to what everyone is saying, it's not going to magically take your job within a year or two, nor is it going to fix a company's balance sheet overnight. So friends, be very, very careful investing in AI companies right now. It looks far too frothy given current valuations. So we've discussed oil a few times now on this channel, and specifically we've talked about how longer term we're bearish on oil. This is because during a recession or bear market, oil tends to shit the bed. Here's 2008 for instance. Or here's the taper tantrum of 2018. And while we're still long-term bearish on oil, there's a fair amount of tailwinds in the near term we want to cover. First, the SPR. If you haven't been living under a rock, you know that the SPR is at its lowest levels on record and it needs to be refilled. Case in point. Secondly, on the geopolitical front, turmoil in Iraq is starting to affect production over there. So you see, about 2 months ago, Turkey halted a major northern Iraqi pipeline after an arbitration ruling by the ICC, the International Chamber of Commerce. This has prevented about 450,000 barrels per day of oil from flowing to Turkey's southern port. And on top of all of this, we have the Saudis, the big boys of the Middle East, coming out and telling oil bears to watch out. Seeing as we have an OPEC meeting coming up and Saudi Arabia likes making money, we could easily see a production slash that's near-term bullish for the price of oil. And for the cherry on top, hedge funds are loading up on short positions in oil at the highest levels in over a decade. Now listen up, amigos. This is the perfect storm for a short squeeze. So don't get caught with your pants down shorting oil into this, unless you're in the short for the long haul.